everybody? It's Ricky here with True Trader, ready for another Sunday prep. As you can tell, we are in Movember, and I know it's awkward, guys, but it's only going to get worse. I'm sure by the end of the month, people won't even watch the YouTube. They're probably just going to read the blog. I am a grown man, and my mustache just never really comes in, so bear with me, guys. Now, I want to touch on a few things. One being, I have been going through some health issues, and I've been seeing a doctor. They can't figure out what it is. The blood tests come back. They say you're healthy as can be. They've done ultrasounds. They've done EKGs, x-rays, everything. Like, they're not sure what it is that's going on until just recently. And I know you're wondering, why is Ricky talking about this? This is personal stuff. I'll tell you why. They now believe that this is stress anxiety induced, meaning my job, or not. Obviously there's other stresses that we endure just from life in general, but what we do for a living is probably one of the more stressful things that you can put yourself through. Now, obviously there's things you can do to be proactive to try to combat that. And the reason why I wanted to talk to you guys about this is because you should never underestimate what kind of problems can emerge from the stress we put our bodies through. So the doctor was like, when he found out what I do for a living, and we talked a little bit about some things, they gave me a depression test. He's like, you're not depressed. They gave me an anxiety test. He says, you rank pretty high up there on the scale for anxiety. And I said, yeah, no shit, Sherlock. But it's one of those things where if you don't address it, it has this compounding effect, because you stress out from your job, and then that stress makes you not perform at your peak, which makes you stress more, and it just snowballs. So you make sure, guys, please make sure that you take care of the mental aspect. You guys hear us talk about this all the time, but I just want to make sure you guys understand the importance of taking care of that mental aspect. The doctor was literally like, some people can take extreme emotional pain or stress, and their body can't handle it, and it just turns it into physical ailments. And they believe that's probably what is happening in my case. So I'm happy that we've kind of at least finally identified. I told the doctor, I go, if what I'm experiencing, like my physical issues, are because of stress and anxiety, I'm going to be extremely happy. And the doctor said, why? I go, because I can fix that. If it's something like cancer, God forbid, or anything else, right, those things might be a little more difficult to fix. But if it's just, stress and anxiety, that's a relief off my back. Now, speaking of the mental stuff, guys, this Thursday, I'm with Kim Ann Curtin, the Wall Street coach, for another episode of Method and Mindset. So here I am talking about the importance of addressing the mental side of things. And here we are this week. We will be doing just that with another new trader. So make sure you guys tune in. That's Thursday, 5 p.m. market time. It's at truetrader.net's Instagram channel. Not mine, not Kim's. It's truetrader.net's Instagram channel. In the meantime, if you're not wanting to wait till Thursday, methodandmindset.com. Hours and hours of free content from both me and Kim Ann Curtin. Webinars on mental stuff, technical stuff, lots of good stuff. Make sure you check it out. Lastly, subscribe to the YouTube channel, guys. If you're watching this now, you're on our YouTube channel. Hit the little subscribe button, turn on the notifications, and make sure you don't miss out on the new content. Goose's midweek watch, again, just killer. And I'm telling you right now, this is I've been training for 8 years. He's got a lot more experience than me, but I'm going to be very blunt when I say this market is not the easiest market to have a good read on, and he has been killing it. And you'll see what I'm talking about when we get into the actual analysis here in just a minute. But don't do a disservice to yourself, guys. Take advantage of your resources, one of them being Goose's midweek watch, one of them being this Sunday prep. We do put out other content as well, and you want to make sure that you don't miss it. If you have the subscription to the YouTube channel as well as the notifications turned on, you're not going to miss it. I know that was long-winded just to say one thing, but you get the point, right? That's it. Let's do the disclaimer and kick this one off. Guys, True Trader, me, or any of its representatives are not registered as security brokers dealers. I'm not a licensed financial advisor. Make sure you understand that trading is risky. Nothing I talk about will be a solicitation to buy or sell a stock. Everything that you hear from me tonight is strictly for entertainment purposes. All right, so let's head on over to our broader market analysis, starting with the ES or the SPY, whichever one you prefer. Right here, you guys see I have the monthly up of the ES. And like we talked about last week, now that we're in November, the monthly 20 has moved higher. We are still extended from it though, guys, and it's still quite a bit lower. So if we were to roll over, we do have some room to the downside. It doesn't mean it's going to happen. There's so much levels of support below us that, there's a lot of things, a lot of dominoes that have to fall first before that's even on the radar, especially considering we are at all-time highs and just cruising. So let's zoom in one time frame to the weekly, and you'll see, again, extended from the weekly 20, just cruising. We've had 5 green weeks in a row, higher lows every single week. Have not had a single week where we break the previous week's low. As bullish as can get. Now, when we get into the daily, this is where, a little bit of cause for concern in the near term. We are extended on the daily, and it's just been grind, kind of sped up a bit, but I still do feel like there's more of a blow off top that could come from this move. I feel like these kinds of moves just, pack the shorts in there, because some shorts get in, and when they stop out, more new shorts are coming in, and it just, it builds and it builds and it grinds. It's that slow cook frog in the pot of boiling water analogy, and it's, it usually is going to end in some sort of climatic fashion, and we have quite a bit of room even just back to the 20-day. What I would point out as far as support goes is the 20 days lining up right with that recent breakout to all-time highs, which is that 45.50 area. And then you also have this recent area of resistance, which I'm thinking will turn into support if we were to come down here, is now lining up with the 50-day, which is, let's see, what's this level here? Let's just call it 44.75. And again, there's just level upon level upon level of support below. So it's not like there's any sort of correction coming soon that's going to be major. Now, we still may have a nice healthy pullback, and for that reason, I'm very light on the long ideas this week. In fact, I actually considered not having any long ideas, and then I was like, no, you got to throw some longs in there. But there's a disclaimer in the longs, and that is every single idea that I throw at you guys this week for the longs is only for a day trade. There will be zero swings started when the market looks like this for me personally, guys. If we pull back and we start building a base, then by all means, I will start looking at the market to tell me what stocks are strong even when we were pulling back, right? A lot of times you got to learn how to use these market pullbacks. I say it as if it's already happened. It hasn't. But if we get a market pullback, you have to learn how to use that as an opportunity to spot the strong candidates, because eventually we will form a base and we will make a push, and you want to already have your list of go-to names. So that's how I personally use those market pullbacks. Also, obviously, lots of short ideas, lots of things out there that are extended, lots of stocks that look weak that if they were to pop into some resistance should make very nice short trades. So that's what the look is for the ES. Obviously, there's levels above. Right now, Friday's highs are where I'm looking at as the first level of resistance. If we just start making lower highs come Monday and rolling over, then I very well may be looking immediately for the shorts. If we want to push higher, there are some levels up here. We have the annual and the quarterly right up there around 4,800. That would be the next spot where I'm looking. So that's the outlook on the ES. Let's head on over to the NQ now. So here is our NQ chart. Let's go back to the monthly and just do this real quick. Again, extended 20, the monthly 20 is caught up a bit, but it's, you know, it's still well down there. Again, just like with the ES, a lot of dominoes have to fall before that's even in play. So let's zoom in. Here's your weekly. And again, it's just been up, up and away. And remember, you know, when we broke the weekly 20, people were like, but the weekly 20 didn't hold. And I kept saying this, guys, I don't care if it gets breached. It's not about that. It's not even about the pullback. It's about what happens after the pullback. And you can call that a breach, right? Yes, we came through the weekly 20, but we never really had a week where we closed under it. You know, we had a week where we came under it, but we closed right back above or at it. And then right after that, it's just been up, up, and up. So guys, don't look at these moving averages or these levels as though they need to hold to the T. They don't. They're just areas, right? Just like a trend line. But it's, again, it's never about the pullback. It's about what happens after. Just like on the short side, it's not about the spike. It's about what happens after it. So let's zoom in one more time frame. Here's your daily. And again, you can see lots of levels of support. The weekly, the daily 20 line up real nicely with this level of support that we've got. You got this trend line that, again, I don't use trend lines as though they are etched in stone. They're just guides, but it's a pretty nice trend that it's holding. It is speeding up. If you notice, the NQ is really kind of taken off from this angle that it was climbing to what it's going now. I would like to see it speed up even more. Same with the ES. I guess I didn't say that, but the best look possible for me at this time is we do get the blow off. I would love it if we get that parabolic look, blow everyone out, and then come back to earth. So as far as support, I mean, they're pretty clear. The 20-day, the 50-day, and then down here around 15, the psychological level of 15K. And then up above, 16.7 is your quarterly, and then your annual up there, the 17,000 level is an obvious psychological level. So that's the outlook on the NQ. All right, guys, and next up, Bitcoin. You can see Bitcoin has been behaving nicely. You know, pullbacks to the 20 are holding, higher lows, kind of getting tight. I do expect a break in the very near term, either to the up or downside. I think if it breaks to the downside, it's actually a good look for what would look healthy in the bigger picture for the next leg up. You know, doesn't mean that a move to the upside isn't bullish as well. I just don't see anything bearish about this chart at the moment. And what I obviously like to do is always look at the weekly and just see. Another thing I like to do is this. I like to squish it down and pull it in and show you guys just how close 100K really is. It's not that far out of the picture, right? And what I do think is that, like I said, if we roll over, I think a retest of this recent break level here of 53K would actually look pretty good. You know, so far, all these big pullbacks hold. You could even throw like a trend line in here, and that's probably going to line up pretty nicely with some levels. Yeah, if we were to roll back down into these areas, I really think that's still going to look just as bullish. I know a lot of people will look at it and go, oh, it didn't go higher, it rolled over, the move up is over. I don't think so. I think that's actually crazy. I think way too many people are cynical on the cryptocurrency space still. I think this is still in the early phases of adoption, and we'll see. I honestly think the bulls are still in control here, and again, I'm using it for playing the equities, so the Maras, the Riots, the coins. There's plenty of them out there. And make sure, like I pointed out, I think it was last week, is to have a plan, because Bitcoin has a habit of having big flushes. And if you notice, every single time, it just gets bought right back up super quick. And if you're paying attention, if you have charts up or alerts set, you will catch those moves where you see Bitcoin roll over and it brings Mara and Riot and Coin down real fast, and they make great scoop opportunities, and you can make really quick day trades on them, or even good swing trade entries if you feel like you've missed the move. You don't need to chase anything. Let Bitcoin bring it to you. So that's the outlook for me on cryptos, guys. All right, let's do a quick little sector analysis. get my sectors up here. And short-term matrix. And okay, real quick, it's pretty simple. Consumer discretionary is like, holy cow, out of control. It's still just up, up, up and away. It's getting really extended. The other one was the information technology, which is, you know, the tech stocks, also getting pretty extended. And again, just make sure to keep an eye on the ETFs that correlate with them, so you understand what I'm talking about as far as, let me go back to the daily. Here is your XLY, make it auto. I mean, just look at the separation between where we're at and the 20-day. That to me, and especially with Friday's candle, you know, you get this inverted hammer up there. You know, we may be ready to pull back on this sector. And so make sure you're familiar with the names that belong to that sector. There's a lot of names that are also looking pretty ripe, so make sure you follow that. And XLK is your tech sector here. And again, looking pretty frothy up here. Lots of room back to the 20-day. Lots of room back to a retest of that recent breakout area. And so if these ETFs start rolling over, if the NQ and the SPY start to roll over, have your list ready of names that are going to be your go-to names, guys. The only other thing I was going to point out was energy and finance. The financial sector have these little high and tight flags built right on the 20-day, both of them. So those ones actually look ready. If the market does want to go higher, these things look like, if I was going to put some money into some long ideas, these are the sectors that look like they're healthy. But again, with the market where it is, be very cautious, guys. I'm, like I said, no new swing longs for me until the markets pull back to some levels and start to base. So that's the sector analysis. And now we're going to get right into the actual game plan for the week. All right, guys. So starting with the long setups, and remember the disclaimer, guys. Everything I talk about in these long ideas are day trades only, okay? So the first idea is Airbnb, and these are for the strong stocks where we're looking for continuation. So these guys, fresh off a big beat on Friday with their earnings report, and the daily chart, you know, prior to that earnings report coming out was very strong looking. I mean, this is a beautiful daily chart. And so you get this big gap up and huge follow through, right? This is a big day for Airbnb. Now, I don't want to chase it, but I do think if it offers the pullback on an early flush off the open on Monday, tomorrow, that there's some opportunities to scoop if the buyers show up right around that 194 to 195 area. You got the monthly pivot, and it's going to put you right in that 50% pocket of a retrace. So that's the idea on Airbnb. Again, just a day trade, guys, and the range on it, $6 ATR. So size appropriately. Remember, when something has really big range, you can't be using these really tight stops and huge size. You need to size appropriately so that you give yourself the room to make sure that if you're actually wrong, one, that you are actually wrong, and two, that if you're wrong, you're not going to get crushed because you had too much size, and when it took you out, you know, it destroyed you. So risk management first, guys, not an afterthought, okay? That's Airbnb. All right, and the last idea for this section is Fubo. And basically, guys, it's one of those stocks, like, I don't care if you hate it or you love it, you can't argue with this chart. This chart just looks really, really bullish. And so, you know, there's the obvious level that if we break above, you know, I'd like to buy dips where we could retest. So, you know, the breakout's over this 30, let's just call it 35. But I actually think that if this offers a dip off the open on Monday, there's a really nice spot right here with this quarterly. The quarterly is at 30.84, and it lines up perfectly with this retest of the recent breakout area, you know, because we did just push up and reject. I'd like to see a little flush down. It's close to the 20-day, and it puts us with the ATR in line as well. The ATR is $1.74, you know, closed at 380 or 32.82 on Friday, and so, you know, a 2 or 3 point flush is going to put us to where we're getting a bit extended on the ATR right into some levels, and I think you might get a quick little bounce right there and probably a nice little opportunity to scoop this one. Again, if the market was pulled back and at support and stuff, this would be a typical setup I like for a possible swing as well. No swings right now until the market calms down, guys. At least for me. Remember, I'm not a financial advisor. And I do want to also point out, it's like, I'm wrong all the time, but it's okay. I'm fine being wrong. You have to make sure that you know what to look for when you're wrong, and you know how to handle it when you're wrong. You can't just be like, well, Ricky said he was going to get long this stock and then it just had no bottom. You have to understand that I'm managing risk. If something's not working, Ricky's stopping out. What are you doing? So don't just follow blindly, guys. Learn how to do the homework, learn how to make your plans, and make sure you execute. That's FUBO. Now let's move on to the next section. Next section, guys, is oversold reversion. Only one name on here, and it's CHGG, CHGG, guys. Yeah, fresh off, terrible numbers, extremely over leveraged name. Like if you look into their financials, the amount of debt these guys carry is crazy, and it just seems extremely heavy. So what's not to love, right? No, honestly, it's not there yet. At least for me, the levels I'm looking for is if we can get down to maybe 25 to 23 and flush out some more, I may start to look for some higher lows and something to risk against for at least a relief bounce. Again, just a day trade. But I do think this one is getting close to being oversold, but I'm not entertaining it here in the 30s. I'd like to see mid 20s to low 20s. That's the idea on CHGG. All right, the next idea on the short side is IBM. Obviously got smoked on earnings. I think Chanos came out short on IBM, came in on those comments too. I think they said they are short a lot more IBM than they are Tesla. Well, congrats, guys. You got that one right. The idea here is I'm thinking a pop into the underside of 126. You got the monthly, quarterly, the 20-day, and it's a retest of the recent break of the trend, right? So all those things lining up right there. I feel like if we were to pop right into 126, it's going to offer pretty good risk reward up there and a good spot to look for the fade. So that's the idea on IBM, guys. The next idea is Pinterest, another one that got smoked on earnings. Actually, these guys got smoked when it turned out that PayPal wasn't going to buy them, right? That was what this big spike was from. There was like a rumor that PayPal was looking at buying them for 70 a share, and then they denied it. The chart looks broke to me, guys. I'm thinking of popping to the underside of the 20-day, pretty straightforward. You've got the annual pivot right there and the psychological level of 50. So I'm looking at a spike. I want an emotional spike. I don't want it to just grind up there. If it were to grind up there, it may offer a good spot to get short for a possible swing if you can find some lower highs and something to risk against. But I don't want that. I'd rather just get a day trade out of it. So I'm hoping for some sort of emotional pop. And if we get it, it may be one of those things where, we obviously don't have a crystal ball. If the market were to gap up Monday morning, maybe we get a gap up in some of these tech names like this, and then the market possibly gives us some wind to our back if it rolls over, right? So I'm thinking a big spike into 50 offers a pretty good short opportunity on Pinterest. We'll see how it plays out. And the last short idea for weak stocks looking for continuation is Square. These guys got crushed on earnings, and you can see it had a big pop in the morning and then just stayed heavy all day. And this to me is a very clear-cut lower high, the way it broke up and then slammed down. So it's like a short trigger all in one day, really unfolded right there. And then on some higher time frames, it looks pretty gross too. I think it very well may want to come down, and it may have a 200 magnet on it. You got the monthly 20 down there at 196-ish. It's just got some levels to get through, and there's not a lot of support till down there. So I feel like that's where it's heading. I'm looking for a possible short on any pop back into 250. I don't know if we get it. I feel like this one's the type that may just fall apart on Monday, and I don't want to chase the weakness. This thing has huge range as well. Remember what we said about names that have big range. This has got almost 10 points of range, or ATR, and so make sure you understand how to trade these. So if we closed at 237 on Friday, you know, a pop into 250 puts us just outside the ATR, which kind of keeps us a little bit on the safe side as far as, you know, is it getting extended if we get up there? Plus, there's a lot of resistance up there. So 250 is what I'm looking for. Again, I don't want to chase weakness on this one. If it just rolls over on Monday, probably no trade for me. But it is on radar, guys. All right, and moving into our overbought reversion setups, the last section. First name on the list is SPG. And the one thing I point out on this one, guys, is if you look on this daily chart, you'll be very hard pressed to find too many times when we get this far extended above the 20-day. The one time I see was back here in after the big March 2020 sell-off, and when we got up here, it just slammed back down like a magnet to the 20. So I'm thinking that's possible with the move we've had. I don't know if we're at the top yet. We may have another leg higher first. If we have a pullback and then make the leg higher, I'll be less interested. I would love a gap up on this. 175 looks great, but again, I'm not here to pick tops. I just want to be patient. Let everybody else do the heavy lifting and then look for the lower highs and somewhere to get involved with defined risk. That's always the key with these guys. So SPG, that's the idea here. The next one on this list, guys, is NVDA. And, you know, just a $700 billion market cap trading 20% above the 20-day. Nothing to see here, folks, right? Now, this one the way I see it is that daily candle on Friday may be telling us that the near-term top is in. So I'm already ready to get involved in this one on any pops where I can, you know, have risk against those recent highs. You know, 300s, that psychological level. You got the quarterly up there at 310 that it kind of rejected. Another one with big range, guys, $10.60 ATR on the name. So, but I do feel like it's kind of telling us that it may be ready. That Thursday candle was gigantic, and so Friday it struggled. It tried to take those highs out, and it, you know, end of day kind of came in. You get this ugly daily candle way up here, way extended from the 20 days. So I'm ready to get involved in this one. I just need some good prices. So any kind of pop off the open, and risk is already kind of defined for this one. So that's NVIDIA. And the last one on this list is Tesla again. And if you thought a 700 billion market cap trading 20% over the 20-day was cool, what about a $1.2 trillion market cap trading 20% above the 20-day? These are crazy times, guys. Now, the difference here is that this name has already had some pullbacks, held some levels, and then went higher. I know this sounds crazy, but I'd like to see this one higher. I'd like to see it break Thursday's highs and get another leg. If it can do that, it's going to get back to looking extreme. Now, I know it has an extreme look to it at the moment, right? We're 20% above the 20-day. How's that not extreme? Make sure you guys understand that sometimes there's other time frames in control. This is the 120-minute chart. Look at how it behaves every time it pulls back to the 120-minute 20. That is what's in control at the moment. So as long as it's holding this, it can go as high as it wants. Let the author write the story. You just read it. That's how you got to handle these things, guys. This is a nice long sideways consolidation. It would not surprise me one bit if this can go higher, especially with so many people looking at it short. Now, I know that this weekend Musk tweeted something to the effect of, he put a Twitter poll out there. Should I sell some of my stock? I think 10% of his stock, right? I can't tell you whether or not the market's going to attack this on Monday and send it lower based on that. If Musk has proven anything, it's that he's probably the greatest stock manipulator of all time. Like, I can't think of anybody that's ever played that game as well as him. Especially when you start to think about some of the things he's done and then think that maybe things that didn't look like they were done on purpose might have been on purpose. He, you know, hate him or love him, he is, you know, he's got an IQ of a genius. And so if he's playing chess and everybody else is thinking that he's an idiot and not, there's probably some shorts that are twisted up here. So another leg higher gets me extremely interested in Tesla. If we lose this trend that it's holding, then maybe I'll look to short pops and have some downside follow through, but it won't have the same extreme look that it did here when we were getting really extended from the 120-minute 20. This was the day where I wanted the gap up the next morning, and we gapped down. It literally killed the A+ setup. It is what it is. We don't get to choose what happens. We just get to play the hand we're dealt. And right now, this could go higher. So just be prepared for that, guys. That's the idea on Tesla. That's the idea on the shorts. That's the Sunday prep. I hope you guys took some things away from this, especially what we talked about in the intro, guys. Make sure you take care of your mental health, your stress, manage your anxiety. This is a crazy thing that we do for a profession. So take care of yourself, guys. Stay safe, manage risk, crush it. I'll see you guys Monday morning. Peace.